Hello, everyone. It's a pleasure to be here, kicking off this stellar panel here that we're going to listen about carbon and design to deals. And to kick off, I always like being in this type of conference because it's kind of like seeing Neymar, right? No one believes in you anymore. You have a few believers, but this sector is proving to be very resilient, and like Neymar, hopefully we'll get there. This global context of resilience, I like to underscore two things why I think this is a very resilient sector. The first one is regulatory improvements in Brazil and globally. This brings more legal certainty to stuff, which is important for investment. And the second thing to underscore is the contractual maturing, the works of contract that is being matured, and is bridging the gap of nature-based solutions to typical project financing solutions, which is something that the market will be more accustomed to invest. And this panel is about design to deals. And we have to talk about the most important contract for the NBS project, which is the offtake agreement, right? The offtake agreement is kind of like the thermometer for the bankability of the project. If you have a good offtake agreement, is more likely you'll be more positioned to finance your project. And without financing, there is no deal to design. And this is a very complex topic for three main reasons. The first one, you're bringing global actors to local assets in Brazil. So you have a huge gap between what, and you have to bridge the gap, right, to find middle ground into what Brazilian project developers have to meet to meet these standards, these international standards. And foreign investors also have to, to understand how to navigate in Brazil. This is very important. The second thing is the Risco Brasil, right? The Brazil-specific risk. We have a very complex land tenure. We have regulatory and political uncertainty. We have community rights, which are neighboring every project, basically. So this is all adds complexity, add risk to the project. And last but not least, these are long-term contracts with a very short track record. So you have to prove to your financier, you have to prove to your off-taker that this is a solid project and that will bring results in 8 years' time, 10 years' time, and it will continue to bring results for a 40-year investment period. So how do we tackle these complexities? We have a couple of solutions. I like to shed a light in one, which is being sponsored by Nature Investment Lab, and I'm happy to be part of the work as well. Is try to standardize, right? So we have to, one of the goals is to try to have a standard offtake agreement applicable in Brazil, to be used by BNDES, to be used by Banco do Brasil, by Ecoinvest. So if you have one standard agreement, you'll have less or lower transaction costs, you have benchmark for the discussions, you have more visibility, you have a comparability between projects. So this is one very good breakthrough that hopefully we'll get there by the end of this year, to try to unlock some capitals. And some of the key points that we also have to bear in mind in this type of projects is when money changes hand. So if you have a prepayment or a POD, so just some food for thought here, and you're about to hear more about that, but think about when money will change hands. So if it's a prepayment, if it's a payment on delivery, how we deal with shortfalls, what type of how to tackle some of the risks, so insurance performance, buffer accounts, there are a number of solutions there. And also, last but not least, the tax reform. This has to be built into contracts because it's a very important thing, and it's not clear to what extent and how the tax reform will impact this type of deals. But you have to take into account to price the asset right. And then just passing the baton here to Pedro. It's a very interesting panel. You will hear about different standpoints from this type of project. So the developer, the buyer, the financier, And like I said, the offtake agreement is very important because the offtake agreement is where all these different standpoints will come to converge. So it's, I wish you a very good panel, and thank you for your time.
Thank you, Raphael. We all know that carbon markets are already being designed for scale. Between the Article 6, the VCMs, the compliance markets, and in Brazil specifically, the SBCS system, this is all already happening. So I think that the real question is, how are all of these mechanisms producing actual deals? Well, let's hear the recipes from the experts. To the stage, Pedro Venzon, moderating the panel, Brazil lead at IETA. And on the panel, we have Caio Franco, Director of Policy and Comms at Mombak, Damien Ricordeau, co-founder and vice chairman at Hummingbirds, Leonardo Fleck, Senior Head of Sustainability at Santander, Rodrigo Lauria, Director of Climate Change and Decarbonization at Vale, and joining us virtually, we have Filipe Oliveira, Senior Advisor at TPG, also representing Rubicon Carbon. Please welcome them.
Okay, so first of all, thank you for Capital for Climate for inviting us. It's a pleasure to be here, sharing the stage with such an outstanding group of speakers. I would like to start providing some background that most of you already know, but carbon markets discussions worldwide are moving from implementation discussions to the implementation state, to actually to a conceptual discussions to more implementation stage. And basically, when it comes to carbon market frameworks, one of the key pillars is how actually we are going to see action taking place on the ground, how we are going to scale up capital deployment towards nature-based solutions and other mitigation activities, and how these deals will actually take place. How can we offer a landscape and an ecosystem that will facilitate these deals to happen? And in Brazil is no different. As we already heard, we have the SBCE under implementation. We are seeing the Ministry of Finance evolving in establishing the governance for coordinating all the regulatory development process, but also the operationalization of the system with the extraordinary secretary on carbon markets. But we are also going to see this year discussions around how the voluntary carbon market will be integrated in the compliance system, how Brazil will engage with Article 6. And in parallel to all that, we are also seeing discussions around how the different levels of programs and projects will interact with each other, such as the subnational state jurisdictional programs, projects, and the federal level accounting. In parallel, we are also seeing developments in terms of the financial landscape, and we are seeing actually the country being the real-world laboratory for large-scale climate finance, with increasing sophistication when it comes to restoration and reforestation platforms, jurisdictional programs under operationalization, and also agricultural and livestock initiatives, beyond blended finance instruments that combine carbon revenues with biodiversity, water resilience, and sustainable production. But there are some questions that remain. For example, how we ensure that we are going to have stable and credible demand to unlock institutional investments, how we ensure that we have integrity and robustness across the different market instruments, and also how we de-risk investments to see these long-term offtake agreements taking place at a larger scale. And that's exactly what we want to discuss here in our panel today, how we connect the market regulatory developments with the market infrastructure and also the finance landscape to ensure that all the potential that the country has in environmental and nature-based solutions actually become real transactions, real projects on the ground, at the scale that we need. So thanks God that I have this fantastic panel with me to help me in addressing those questions. So let's begin with Caio. Caio, we are seeing tremendous international interest in removals and nature-based solutions. Yet, scaling remains a challenge. In practical terms, what role Brazil's government play in unlocking investment in this sector?
Thanks very much, Pedro. I think your question carries in itself part of the answer, right? I would say Brazil's government and public policy in general right now have a scalability role in this market. As we've discussed, and as I used to say, I think we are past the point now in many of our projects in which we were discussing whether or not there was product market fit, whether or not there was a buyer that was going to buy carbon credits at the highest levels of quality and at good prices. I believe the voluntary carbon markets have carried us through this period of, let's say, product market fit. So, and it's a very important thing that the voluntary carbon market exists because it iterates very fast, it carries a lot of integrity concerns, it allows us to learn a lot and to really basically kindle the spark of this market. But right now, the question that the world is posing itself is whether companies like Mombak, which do carbon removal at the highest levels of quality, whether they're some niche business that can make some money, or if they're actually a powerful tool for humanity to actually tackle climate change. And the answer is scalability. I think the role of the Brazilian government is in that. It is already doing it in many ways. For example, through BNDES, which was here in the last panel, providing very good funding to very important initiatives. It's doing that in initiatives such as BNDES and Petrobras's initiative of Pro Floresta Mais, which is actually driving demand for high quality reforestation carbon credits in Brazil. But it still needs to do even more. If we are to reach anything like the scale of 10 billion tons removed from the atmosphere by 2050, which is what we probably need to do, and we are orders of magnitude behind on that schedule, we are going to need to invest money now in very scalable ways and with high predictability. The way we do that, in my opinion, is by accessing compliance carbon markets. And right now, what I guess is the missing link from what the Brazilian government has been doing is increasing and enhancing and making it faster for good project developers in Brazil to generate socioeconomic development in Brazil by accessing these international carbon markets, mainly through the issuance of ITMOs, which are correspondingly adjusted carbon credits that can be sold to other countries. And I think we'll have time to discuss that later.
Thank you, Caio. So staying on the theme of scale and financeability, so Damien, your work sits precisely at the intersection of investor and project. So how are you helping projects leverage funding opportunities and overcome market volatility? And what differentiates a successful project?
Yeah, I think just to take your point on that, we want to have the nature-based solution market as a big market. And I come from the renewable energy work, which now is a really huge market. And we want to make, I would say, nature as a class of assets. And so if we want to have a capital drawn down to this market, we need to make bankable projects. And for that, making bankable projects means that we need projects. And as of today, we see, and at the beginning, we saw an image with a lot of funds coming in financing this kind of market. But the thing, what we are missing, this is the early stage capital to finance the first part of risk, because many investors don't want to take the early stage risk to pay for the development of the project. And what we are doing at Hummingbirds is trying to say, yes, we are here to support you at the first stage of your project, taking the risk of the development, so it's not yet a project. And then when we have a project, we can finance it for the implementation. So we can do both early stage financing plus also implementation on the long run. And it's only when we are able to do both that we can manage to have a good pipeline of projects. And when we say, you will tell me, what about what is a bankable project? And a bankable project is not only to have a good technical project, and your project is registered. It's also to have, it's bankable in terms of land, to secure land on the long term. It's also to have a legal structure that works. For example, just to take a really clear example, I would say 80% of the market was structured with RPAs, so contracts in the past, in the last 10 years. And now, what we see, we need to create a dedicated SPV for each project to make sure that we can create project finance. And when we have project finance with a dedicated SPV, then you can have capital. Capital, not only equity, because we are only thinking about equity, but also bank, commercial bank that comes to finance this project. So you have that, a bankable project with early stage capital, you can manage to have a bigger market for nature-based solution.
Thank you so much, Damien. So let's now bring the demand side perspective with Rodrigo. So we know that Vale has been exploring different offtake structures and carbon-related vehicles. So what motivates a company like Vale to engage more actively in this kind of markets? And what kind of criteria do you use to evaluate investment and projects into when engaging with these markets?
Super. Good afternoon, everyone. First of all, thanks, Capital for Climate, for having me here. It's a pleasure to be part of this group. I'd like to start by saying that as a mining company, we're highly dependent on natural resources, and this is why climate change is so important for us. Now, we have climate change embedded into our strategy. Double-clicking on this, we have the goals, and one of them is the Scope 3 target, to reduce up to 15% in the value chain. And this is how and where the dots are connected, and we rely on carbon credits to help to achieve this goal. When you do the maths, we're saying something around 17 million tons of high-integrity carbon credits yearly, 2035 plus, so it's a huge amount of credits. And this is why we are developing, engaging, and trying to foster this market. So this is the rationale that we need to understand. The point is, there's no news regarding the criterias, you know. I mean, we look for the advantages, the additionality, the integrity of the project. So there's no rocket science here. But the key aspect is how to have this pipeline at time, at cost, and something that we can really rely on. So this is how we do this, engaging with funds. We do not develop anything. We do not operate any project. We understand the role of a private company to foster this kind of environment. Depends on the case, using a grant. Depends on the case, using a concessional capital. Most of the time, looking for prepayments or long-term agreements of takes. So this is how we manage this ecosystem till now.
Thank you, Rodrigo. So now I would like to go online with Filipe, who is joining us from Singapore. Thank you for joining so late, Filipe. You bring an important international lens to the discussion. And I would like to understand a bit better how Brazil is being seen by global investors, and what does our market still needs to improve to attract more attention from global investors as well?
Thank you. Good afternoon to everybody. I'm actually in New York. I'm back from Singapore, so I flew in time back, hence why you see a very lightly background. But I would like to say, first of all, this is an important subject to discuss and give some certainty and trust to the market that financiers like ourselves are backing and believe in this market, not till 2030, not till companies achieve their net zero goals, but we see this as an infrastructure play. A little bit about Rubicon Carbon. We're a global carbon asset management company investing in high integrity projects. We trade, we finance, we work with project developers, and we are probably the leading player in the offtake agreement space. We're also joined specifically in Brazil because we believe in the Brazilian market and the South American market with EV. So if you want to understand a little bit more about our partnership, please find Bruno. I think he must be there listening. And EV is a Brazil-based regenerative investment platform in which we've partnered with TPG and Rubicon. And the same, we're investing in infrastructure plays in carbon in Brazil. One of the projects that we're working very closely is actually with Vale, so we're working very closely with Rodrigo, and Bruno can explain a bit more on how we're doing that. But my point is, we are investing, we're focusing in Brazil, and we see Brazil as one of the global South players that can really help global North companies get the best infrastructure and high integrity play for them, whether you're in the investment side or you are a company or a corporate.
Great, thank you, Filipe. So, moving to Leonardo. Recently, we have seen major international buyers such as Microsoft revisiting their carbon removal strategies. So, how is this impacting the market, and how can we better address the risks and to provide the confidence needed for the market to scale now?
Thank you, Pedro. Good afternoon, everybody. Thank you, Capital for Climate, for being here again. You left the most difficult question for me, right? And potentially the most controversial. So I don't expect to convince anybody of the view. I will provide a view from a market perspective. I would start saying that it is clearly affecting the market, right? But I would avoid reading it as a simple negative signal. Large buyers like Microsoft, they are under a lot of pressure now to reconcile three things at the same time. One is their net zero commitments. Obviously, they're under a lot of pressure, especially under the turbulence and the noise that we see globally. The growth in their own emissions, especially due to AI and data centers, which use a lot of energy and was not in their models when they established their commitments. And the need to show that every credit that they purchase has the integrity that they claim. But in the case of Microsoft, it's important to be precise. Their carbon removal program has not ended, right? They have not changed their ambition as far as we know. They continue with their net negative goal by 2030. What they say is that they are pausing and reviewing the pace of new carbon removal purchases, and they want to adopt a more disciplined approach. And I think that in a sense reflects the ESG movement now. We are trying to be much more pragmatic. It also reflects the previous years of Microsoft since they started this program. Microsoft has been very bold, and also in a sense, very experimental. We have seen them purchasing carbon credits, carbon removal credits from all over the world, from all kinds, right? From technology to nature-based. So it's natural that after a few years, they stop and try to observe the lessons that they have learned to figure out what's the best strategy going forward. But still, it is a blow to the market, right? Because some estimates show that Microsoft concentrates about 80% of the global demand for carbon removal credits. Is a quite significant concentration. There's no way that any market would not feel negative about that, right? There's a significant reduction in demand for some time, and we don't know for how long they will remain in pause. So I would say that potentially there are three types of impacts of this change. The first one, and I think the offtakes were referred initially in this conversation, right? I think offtakes will become more important for any investor looking at allocating capital in project developers, because they will want to know who the buyers are and whether there are offtake agreements. It's going to be harder to finance a project without offtake agreements. The second, there may be an impact in price. If you reduce 80% of the demand, any economic model will show that there may be a reduction in price. And a third point, developers may become a little more cautious about their expansion plans. We know that restoration and nature-based solutions, they require a lot of upfront capital, right? So if buyers hesitate in buying those credits, project may delay investments. To finalize, how can we address these risks? I don't think there's a silver bullet. What I would say is that over the last few years, Brazil built a lot of conditions, enabling conditions, and we have seen a lot of traction in different initiatives that make the Brazilian situation more robust and resilient to these types of shocks, I would say. We have a cap and trade system that is being set up. It may take a while until it sends a strong market signal to the market and affects it, but still we have a system being set up. It is a market signal. We have many approvals from the BNDES Climate Fund to many of the developers. I think last year it was 2 billion reals. And as far as I understand, this year is a similar figure, so it's a significant amount of subsidized capital for these developers. There are many banks now providing financial guarantees linked to the climate fund. We were the first one with Mombak some time ago, but now there are many other banks, many other developers receiving those funds. Multiple startups and funds are now in operational phase, so demonstrating that we are getting traction. Some of them are already issuing credits, which make it easier for them to finance themselves. Funding from EcoInvest, as we heard, 2 auctions covering NBS. One, we're going to hear more about it on Monday. Multilaterals coming alongside those investments with those banks that receive the funds. So significant amounts of capital coming to these lines. And perhaps the most important thing that we have discussed extensively over the last year, especially during COP, is that the risking mechanisms are starting to emerge, right? And that's really key for emerging markets like NBS, like restoration. But the key thing that we need to address now, I would say, is demand, right? I like to think about limiting factors, and I think the next limiting factor is addressing demand. It is not sustainable for a market to rely on a single purchaser of 80% of the product. And we also need more Brazilian local demand. We have the Petrobras auction, which was great. It's in the right direction, but it's still insufficient. We need to figure out ways of increasing the local demand, because it will also help us to leverage, if we increase local demand, it will be much easier for us to get global demand for our own credits as well.
Thank you, Leo. So going to our second round of questions, I will invert the order here, and we'll start with Filipe. So Filipe, coming back to you, what are the key differences between what international investors require and what is typically presented in the Brazilian market? And how does Brazil fit into Rubicon's investment strategy?
Yeah, so I just want to kind of highlight a little bit of, also the Microsoft, because I think that's that question. I think we have to be thankful to Microsoft. They've done a lot of good work in the past couple years, led by Melanie. And what they've done is they shaped the market to be ready to be scaled. Like all of us, we make decisions on a quarterly basis. If you're a public company, you probably have to have more scrutiny on those decisions of how to actually scale your own business. So I think there's Microsoft's getting a lot of heat, especially from a lot of the carbon developers, and I'm not suggesting that anybody that's on stage or listening or is present, but some of the stories I think have been pushing them, saying, why are they doing this now? And I think that companies have the right to shift strategies, and they have not pledged out of leaving the carbon markets. They're still there. They're still making sure that it scales in a responsible way. And I think we have to thank them for a lot of good that they've done in the last couple of years. So I just want to highlight that. The second one is, I think we have an announcement that was done today in Singapore. We are now part of the ARC coalition, around 10 Asian companies pledging a buyer's group, 10 million tons by 2030. We're part of that. I think what Brazil needs to do is do a similar movement that Singapore is doing in leading the Asian policy strategy, as they've done with Article 6. And I think similarly how COP30 had many pledges, one of them being carbon accounting, but also pushing and scaling the carbon market. I think Brazil's next stage from COP30 is creating a coalition of buyers, which demonstrates that there is demand in South America, but also creating a coalition of quality projects and demonstrating that there is an ability to scale in that fashion. So how do we look at it from an investment standpoint? Well, we look at many angles. One of them, of course, is whether it's in Brazil or in Indonesia or anywhere else, we like to understand, what the project developer is doing in demonstrating that quality. We have a team of scientists that normally come and go to the site, but then we look at the financials around that model. And we believe that Brazil has great margins to invest. So I don't think there's any type of point that I need to say, what is Brazil doing that needs to do better? I think Brazil's doing a great job. Mombak is a great example. And I think we just need more Mombak benchmarks to kind of push and scale that.
Thank you, Filipe. So, Damien, thinking about your perspective, also like bringing your international perspective, what's your view, like comparing to other emerging markets, where is Brazil advancing? And also like what needs to happen over the next 2 years to consolidate the country itself as a priority destination for climate capital?
I think the key question, we have to divide the market in two parts in nature-based solution. I would say taking two huge parts of the market. You have the REDD+ project and the afforestation project. And I think there is two different kind of scenario for that for Brazil compared to, I would say, international competition. When you look at REDD+ project, clearly Brazil is this is a top country, top developers, and at the moment in the market, we know it's a bit complicated. We can say even a mess because it's complicated to develop REDD+ projects in Brazil. We have to choose a good standard. Vera maybe change to other standards. So, and Brazil has to make a good play on that because it's an example, a benchmark for the whole entire market in the world on REDD+. So it's key for Brazil to continue to develop REDD+ project on that. And on the second part, you have the afforestation project. And what when we look at this project at Hummingbird, we see that there is an international competition for prices. REDD+, you have competitive prices, so it will be okay. We need to find off-takers for this kind of project. It will be complicated, but it will come back. Maybe in 2-3 years. So the question is, how will be in 2-3 years? I think off-takers will come back on a REDD+ project, maybe over a new standard. But on IR project, afforestation, for Brazil, there is international competition. And you compete with other countries. And you compete with, for example, with African countries. And the cost of production of a ton of CO2, when you take Brazil and Africa, you can have a double of pricing. Because, for example, we have a project in Africa on our side, we can have a delivery price of $15 per ton at some point, where here in Brazil you can find a double price. So in that sense, where I think people like, I think Microsoft say, I stop down on IR project, I think they will come back on REDD+ project just to optimize also their price. So everybody will look at prices. And in this international competition, it will be a challenge also for Brazil to continue to develop projects competitive with this international environment on afforestation. So maybe a solution for that that doesn't exist so much, and coming back on the offtake agreement things that we were doing, it's not only a question of offtake agreement on carbon, which is really key, but also offtake agreement on agroforestry product like cacao, cocoa, coffee, and so on. And if you have that, you can improve your project financing, improve the way you leverage your project, and improve your, at the end, cost of production with a better financing.
Thank you, Damien. Rodrigo, coming back to you from the demand side, what have been the main challenges in unlocking investment into NBS and also closing long-term contracts?
It's a very good question because we can't spend all the afternoon discussing this, but I'd like to highlight 2 key points from my perspective. The first one is the real commitment that the companies or players need to do. And I'd like to leave a question to the audience. Are we really connected and committed with this kind of stuff? There's a lot of noise, everybody's committed, but in the end of the day, the money doesn't flow to the projects. What is missing? I mean, are we really doing our best to address and to deliver the projects? Filipe mentioned the ARC Coalition. We are proud to be part of the ARC Coalition. We need to do more. We need more coalitions. So I think it's a very interesting question to bear in mind that are we really connected or trying to address or solve the problem, relying on the next one? So everybody relying on the next one. And the secondly, I think it's scale. We need develop or identify projects that can deliver what we need to be delivered. For our example, we need 17 million tons per year. You don't have a pipeline ready to deliver 17 million tons per year, and I'm talking about one single company. So, I mean, it's important that clock ticking. We need to understand that now we have to be very, very intentional on how to identify, deliver, and monitor these initiatives. Probably we found more questions than uncertainties, but I'm not optimistic. I think we will learn as we go. So let's start and let's enhance the mechanisms. Let's discuss more. Let's do more. Clock's ticking. We need to act now. So this is my 20 cents for now.
Thank you so much, Rodrigo. So as we only have 80 minutes and 2 more speakers, but since we have a similar question, I would like you to address the same question, actually. So what's the role that Article 6 can play? First, you, Leo, in this process of generating stable demand for the market and address eventually the volatility of some concentrated landscapes.
Sure, I will not claim that I'm an expert in Article 6, so I try to answer this question from a market and a financing perspective, and trying to be very pragmatic as well, as we had some discussions with the government in the past, and with you guys, Pedro, as well. I think, as I pointed out in the previous question, we need more demand, we need more diversified demand, more predictable demand. And that includes local demand, voluntary corporate demand, the future demand from the cap and trade system in Brazil, and also international demand through mechanisms like ITMOs, right? ITMOs, they are important because they create an additional demand channel that is not fully dependent on the voluntary carbon market, and not dependent on the Brazilian cap and trade system. So in that sense, they can help bridge the opportunity that we have in Brazil now with the more mature market that we want to create in the future. Of course, there are worries about how this is designed, these mechanisms are designed. We need to design them carefully. Brazil has to protect the integrity of the NDC. The worry is that if we export our credits now, if we export our cheap credits in the future, it will be more costly for Brazil to meet its own goals under the NDC. So we should authorize these transfers in a way that don't create problems 10 to 20 years in the future. But we also need to recognize that the world is changing very fast. Technology, geopolitics, corporate demand, they're all moving. We have a very volatile context these days, and I don't think it's going to change. It's probably the most uncertain and volatile context that we have faced in history, we are facing now, and that's the new normal. So it's very hard to predict the future and to design things perfectly today. So my worry is that if we, as a government, as a society, if we try to be way too careful in designing and we delay that process, other countries will occupy that space, attract the capital through ITMOs, and build their own capabilities. So why this matters? This matters because the capital that comes now, if we are able to attract that capital now, it will help to build the local supply of these green technologies and make us more cost efficient and competitive against other geographies. So we have to be careful not to miss this window of opportunity. The approach is not, again, to ignore the risks, but to manage them well. And I think what we need now, and Pedro is working on this, Pedro and others, we need to create a robust case that demonstrates that through numbers, that allowing ITMOs now will be good for the decarbonization of the economy, will bring revenues to Brazil, and will help our sectors to become stronger.
Thank you, Leo. So, Caio, from your perspective, what could the export of ITMOs represent for the restoration sector?
Sure. It's actually quite easy following up Leo. He really set me up for success here. So I'm just going to try and give a bit more color to what he said, because I agree 100% with what he just said. I think what ITMOs, basically Brazil authorizing carbon developers to export credits that will be then counted into other countries' climate goals, their NDCs. What they do for us is predictability and scale, which are the two main things we've been discussing. I also agree with Leo's previous remarks on the voluntary markets and with Filipe as well, the important role that Microsoft and other companies have had and will continue to have in driving these things, bringing us up to scale. But right now, we need to start actually doing the scaling, and we cannot get anywhere near the order of, as I mentioned, 10 billion tons of removals a year by 2050, which is implied in net zero calculations, if we don't take into account compliance markets. And because in compliance markets, purchasers, buyers do not buy just because they think it's a good idea, they buy because they must buy. And this is how we get to true scale. This is how we get to true scale in any market, especially in climate-based markets. So if we do a quick comparison, we are, when we talk about carbon removal tons, we are at this scale of maybe a couple million tons a year, let's say. We need to get to 10 billion a year by 2050. Between now and 2030, the announced demand for ITMOs globally is something on the order of 730 million tons, the currently announced. This is how we get to that scale. This is how we allow enough predictability on the fact that I will have a market in order to make the investments now that will be required to reach that scale in time, because that's the other problem. As it's been mentioned, Mombak, for example, we're a multi-pathway company doing carbon removal in different areas, mainly reforestation and enhanced rock weathering. So we'll do anything that is both scalable and sustainable. But however you look at carbon removal, you're looking at something that's costly to do and that needs a lot of upfront investment. I cannot get that upfront investment now unless I have some certainty on demand. And I do not have enough demand for this market to really make a dent into climate change if we don't access international compliance markets, which ITMOs would allow us to do. I think a lot of work has been done by IETA, by other folks as well, and we've been part of that work to try and convince and show the Brazilian government that it's actually not contradictory with being a good player internationally and having an ambitious NDC and having integrity and making sure that we are reliable as a climate partner for other nations, that is not contradictory with allowing some amount of ITMOs to be sold now in order to finance these industries that are really nascent in Brazil. I think Leo poses a great question. Like the problem is, what if we export all the cheap credits and then it's expensive for us to mitigate? I have an answer to that. We should export the most expensive credits and use that economic result to create the bulk of the socioeconomic development and financing the NDC. And I actually believe that by doing that, Brazil is not only going to get socioeconomic development, it's also going to be net positive for the NDC. Because if, for example, our industry in carbon removal, specifically reforestation, right now we are a negligible amount of our NDCs because we're just not big enough. So allowing us to export ITMOs is not that big of a deal for the NDC, but once we do get to do that, we access those international markets, we access financing, we get more competitive internationally with our competitors in Sub-Saharan Africa and Southeast Asia, etc. And that allows us to make the investments that will make us a big part of the NDC in the mid to long term. So that's how I see it, and that's how Mombak sees it.
Thank you so much, Caio, and thank you for committing with the time. So to conclude, I would like to highlight 2 points that I heard during this panel. And I think basically what happens in the next few years will define whether Brazil will consolidate itself as a climate finance and nature-based solutions leader worldwide, helping to attract more capital towards the achievement of its climate commitments, but also the achievement of the globe climate commitments, why not? But we need to be really conscious that the scale that we need to achieve will not come from any single mechanism. We need like this landscape where different mechanisms are interacting with the others to transform this environmental potential to actually investable opportunities capable to attracting long-term capital. With that, I hope you have enjoyed the discussions as I enjoy it. Thank you all for your attention today. I see you around. Thank you.